Okay, here is a quick trade update on my XAGUSD trade. So right now the London session has just begun. So yesterday night, about this time, I took a trade, a buy trade on silver. So I believe my entry was around here, sometime around the 11 o'clock candle for the 1 hour time frame. So we did end up having a breakout on the London and New York session overlap. So that went all the way up to 32.90, and then it retraced as the Asian session opened. So the reason why I took a more wide stop loss at 31.65 and 31.08 is because silver tends to trade pretty volatile in the medium type frames. So we can see in the 4 hour chart, this was a breakout, pushback, and then a very quick rebound in the same 4 hour candle. This was just a giant wick here. So had I trailed my stop loss to break even as soon as this happened, there would have been a good chance that I would have gotten taken out here. In fact, I would have in this case. So that's why I kind of delayed trailing my stop losses. So right now, both stop losses are at 32, 32. This is after I saw this pushback at about 6 o'clock today. Because, let me just rewind here. Because right after I saw this candle, I knew it was fairly oversold in the 1 hour and 15-minute time frame. So just looking at the lower ones here. So at this point in time, around 1930, either two things could have happened. Either the sell-off could have continued, either late in the Asian session or London session, and it would go down. So like this. In that case, if it went down, this stop loss would be perfect for triggering the exit and saving me some loss. I believe it would be, yeah, it would be about $200 of loss on each position. That was from an original open risk of 1,300 and 800 on both these positions respectively. So essentially cutting my risk, yeah, almost in a quarter or even more. Or the other scenario would be it would bounce. This would be a false sell-off and bounce as it did right now. So it's going up like this. In that case, I'm also good here. I'm limiting my risk, but not choking off the trade. So in this case, as London session opens, we do see this was kind of a false breakdown, and this gap is getting filled fairly quickly. So yeah, whenever you see pockets like this, if I can draw it with a shape here, let's see. Well, I can't exactly find the right tool right now, but basically if you draw a bubble like this, kind of like an oval shape, you see it getting filled very quickly, and you can even see this in past past occasions. Like you see here, here's a bubble, it gets filled very quickly. You could even say this is a bubble, but it doesn't have to be on this time frame either. You can look on the daily time frame. As you can see, these are kind of bubbles right here. I kind of learned this visual perception from a trader called Linda Rashke. She has a lot of great content, and one of the memorable lessons I got from her was whenever you see the market fill a bubble very quickly in any given time frame, that's kind of an indication there's a short-term imbalance, and when the market perceives that, it will try to fill it in very quickly. So if you do see that, that's kind of a confirmation that your original direction or the unfolding direction of the trade is the correct one. So in this case, we've filled this gap, this bubble here, and we are back at the $32.87 levels. So from here, there's increased confidence that this could break out in the next 12 or 24 hours, especially when you take the daily time frame into consideration. So let's look at what happened here. Let me just delete these. Okay, so looking at the daily time frame, this candle here on Friday, February 14th was particularly of note. We saw a big breakout and then pushback. So that alone doesn't give confidence this breakout will continue, but you have to check the very next candle, how it is. So if this next candle on Monday sold off and went down, then you can kind of trust this wick candle as like a, I don't know if it's called a hammer or a shooting star, but it's pointing in the opposite way that the market might go. But if you see it get engulfed, or basically the next candle doesn't really have a continuation, then chances are it's likely like a false candle here, and it might continue. So as it happened on Monday, this candle closed. It actually went down a little bit and then closed up at 32.38. So this is almost as good as a breakout. In fact, it sets up the continued, upward rising trend here. And then yesterday, Tuesday, we got this breakout. So that's good. We are continuing this trend that formed a bottom back in December. So this next daily candle, we've got about 14 hours left. So almost half the candle is formed, but we already see it's sold off and then come back up. So this increases the chance that, there's already buyers that are showing interest in filling this area between 32.46, 47, and the original opening price, 32.86. So given we've already filled this once, it's a bit less likely that the buyers will give up. It's more likely the sellers will give up, and the buyers, if more come in, will push this price up continuously to higher levels such as 33. So that is what we like to see. But if you go down to the mid time frames, basically it is still unclear where the direction is going. So in the 1 hour time frame, most of these midpoint lines are trading flat, and 4 hour, it's broken out a little bit. You can see the Chikou span is above the price, but all these other lines are flat. And what's more, the mid time frame midpoint, the Kijun Sen, is above the Tenkan Sen. So that's not the right order. We need to see the short-term mid-frame midpoint above the medium time frame midpoint. Then this trend is kind of unfolding as you might expect. But looking at the overall price action, it is still constructive towards an overall breakout. Anyway, just to explain again, I chose this trade in silver rather than gold because even though on the weekly and monthly time frames, silver has been lagging gold, but the setup is a little bit better in the sense that my stop losses can be a bit tighter if I were to enter at the time I did. So let's see how gold compares. Gold is obviously up in the weekly and monthly time frames, but in terms of the mid time frames, okay, we see that gold is now trading at the previous all-time high, 29.34. So yesterday, when I took the silver trade, we were here in gold, 29.12. I didn't dismiss the possibility that gold could keep breaking out and then hit the all-time high, but the risk reward, I just didn't feel like taking that trade. It's kind of a one-to-one risk reward. If I set my stop loss down here, 28.74. It's about equidistant to the previous high level containing this range. So, but now if it continues to break out, this would be a different picture. The risk reward would be much better if I took this trade on the next breakout. So suppose gold closes above 29.38, or let's just say 29.40, then I would probably place my stop loss somewhere here, 29.21. This lines up pretty nicely below the previous low and the Kijun-sen. So that's how I would trade this if it continued to break out like this. And then, yeah, the 4 hour, it's also a similar picture, but you can see these lines are in the correct order. Tenkan-sen above the Kijun-sen, above the long-term Kumo. So yeah, in the daily time frame, this would just be another bounce off of the Kijun-sen. This is quite a nice trend. It doesn't really close below the Kijun-sen, or sorry, the Tenkan-sen, and very rarely do we have wick candles forming here. So yeah, if gold continues to break out, I would expect silver to mirror the move. Again, silver could have a much more volatile move and go up to maybe 40 to 50, somewhere in this range. Okay, and just to compare, we can look at the dollar for reference. So dollar Swiss franc, I was also watching this. It's still hanging around at the top of this range here. Hasn't really sold back down. But if you notice, the rebound off this low, the 0.9 level, is very weak. So before you see applying the same gap filling perception, you see we filled this gap very quickly, not even in maybe 1, 2, 3, 4, 5 candles, 5 4-hour candles, we filled this gap. Same thing here, but this one is taking quite a bit of longer time to fill, and even when we do fill it, it's not even back to the halfway level, which is indicated by the Kijun-sen here. In fact, the halfway level is falling down as time goes on. So we would have had to be back at 0.906 by this candle here. Essentially, yeah, Tuesday, 10 a.m. To get back to the midpoint. But we didn't really do that. So at any time, dollar Swiss franc could sell off. Suppose we draw a trend line like this. If it closes below this trend line, then you can be fairly confident that it'll start trading flat, or it can sell off in a high liquidity time frame very soon. But it's a little bit tricky if you want to sell right now, because you don't really know where you're going to put your stop loss. If you wanted to put a small position on, you would have to put your stop loss all the way up here at 0.917. And I expect dollar against the other currencies will look similar. Dollar yen, again, it's nearing a key breakout level, similar to dollar Swiss franc. Yeah, dollar CAD is actually doing, starting the trend a bit earlier. We had this big rejection a couple of weeks ago,